Welcome to the Accounting Success Podcast. Ian Wellham is a chartered accountant helping other CPA firms maximize their profit potential and become the most relevant advisor to clients. To learn how you can add value, introduce new revenue streams, and move into high-value advisory services, simply go to www.haydenrock.com. On the podcast, Ian brings together successful accountants and industry thought leaders to share with you how they serve business owners and how you can too. And now, here is your host, Ian Wellham.
Hello and welcome to the Accounting Success Podcast. We've got a real treat for you today. We're visiting with Jody Grunden of the Summit CPA Group in Fort Wayne, Indiana. As the managing partner of Summit, Jody is a true visionary who's redefining what it means to be a CPA in the 21st century. He may be from the middle of the country, but as you'll see, his thinking is certainly not middle of the road. In fact, he's used his out-of-the-box ideas to build a thriving firm with clients all over the country. Today we're going to find out what Jody sees that other CPAs are missing. But first things first, let me introduce Jody Grunden and say, good morning, Jody. Thanks for joining us today.
Yeah, good morning, Ian. Thanks for having me.
Well, I know you spend most of your time focused on virtual CFO services as opposed to traditional accounting services, and that's the thing I'd really like to zoom in on today. But before I start grilling you with questions, and perhaps you could give the listeners a 2-minute version of your background and a little bit about your firm.
Sure, that'd be great. I come from a public accounting background. I worked for two mid-level accounting firms, and then also had some experience in a big corporate company, a big corporation, $25 million corporation. So I kind of got a little background in both. And starting Summit, we've grown from, and started in 2002. We've grown from just a few clients to we have, this year we'll probably end up with real close to $3 million in revenue, and I have 30 plus team members right now, and it seems like we're growing pretty fast, adding clients, at least 2 to 4 clients a month, and adding another team member, it seems like every other month. So the growth's been good, it's been fun, profit's been great, and enjoying the ride.
Excellent, that's great. So let me just ask you a couple of things about, back in the day. What was it that actually got you into the accounting industry? Did you have some kind of inspiration to become an accountant?
Kind of a funny story. The reason I got into the public accounting itself, or the accounting industry, is I wanted to do something that I could better myself individually. So I was a little selfish on that end, and I felt accounting or finance or something in that end would help me personally out. And then with the accounting itself, once I got in it, it was it kind of switched. It was more, now how can I help clients out, and how can I make their life better? How can I make them profitable? That sort of thing. So it kind of started as a selfish, and then kind of turned around as a helping people out type of an attitude.
Yeah, actually, that sort of fits with your USP, your unique selling proposition, because you offer virtual CFO services versus traditional accounting services. Could you perhaps explain for the listeners what you mean by virtual CFO services?
Yeah, sure. With our clients, we offer a variety of services that our clients can actually bundle up into one service, and that would go from taxes, tax planning, tax projections, to back-end accounting, which would be like accounts payable, accounts receivable, or high-end CFO level services. And so with a client, depending upon their needs and wants, we can bundle that service and make it a flat fee so that they're not being billed by the hour. And so with the virtual CFO service, for instance, we speak with the client at least twice a week, a lot of times helping with cash flow management, other times helping with when to hire and fire employees, digging into key performance indicators for the client, forecasting on a regular basis so that we help them really determine when they're going to be short on cash, when they're going to need a line of credit, if they would ever need a line of credit, help them with their banking relations, really being their accounting department. And we can do as little or as much. So if they have an accounting department, we can actually oversee that department for them and then report up to the board of directors or whomever else is your leadership on that team.
No, that's very interesting. And perhaps you could explain to me a little bit about how often you meet with clients. I'm sure it varies from client to client, but perhaps you could shed some light on that for me.
Yeah, we actually give, every one of our clients has a team of 3 to 5 Summit CPA team members. One would be the actual primary CFO. Then we have actually a backup CFO or secondary CFO that pops on during the financial statement meetings. And then we have our tax manager actually takes care of the tax planning and projections and also oversees the tax return. Then we have 2 accounting team members. So there's a huge team that actually encompasses every single engagement. And with that, the CFO will talk at least once, maybe twice a week, and then directly with the owners of the company or whomever the main contact is over there. And then the accounting team will actually talk with their bookkeeper or whoever's on staff. And so the contacts per week is pretty often, at least on a weekly basis, at least 2 or 3 times a week, if not more, depending upon the customer's needs and wants. I mean, everything is, like I said, everything is all-encompassing or flat fee, so we give our clients a very wide range. They can contact us really anytime they want, through any medium they want. If they want to contact us on text or email or Slack or really any kind of medium to contact, and we're there for them really at any time.
And you talked about the types of things you do with the client. How often do you come across a client who is not certain actually about what direction to their business should be going? And do you involve yourself in helping them with that?
Oh, absolutely. It seems like most clients have really no idea what the direction they want their firm to go. And so we kind of help them by prodding questions, finding out really what kind of environment they want their firm to be in, really kind of coach them on that type of an aspect. And then we put together the plan so we can kind of see exactly how that's going to actually, work out. So if they want to have a retreat with everybody and they've got 50 people on their team and the retreat's going to cost $2,000 each, that's going to be $100,000. We'll plot that in there and see, hey, can we actually afford it? What do we need to do to enable to make that happen? All that kind of good stuff. If the person wants to eventually sell the company, we'll be part of that merger and acquisition. Talking with them, again, it's included in the flat fee, so again, no additional cost for them. And we'll help them and guide them through the entire process. So when clients come to us, a lot of times they like I said, they know their business really well, but they don't understand how the numbers work. And so that's really our job, to kind of guide them. If they're not sure where they're going to go, we'll kind of sit down with them and just kind of work with them and plot some different areas. And nothing's really fixed because it's so dynamic, because we're working with a forecast at all times. We can kind of show them, hey, here's what we need to do and here's what we need to go. If they don't like that line of business anymore or that thing, we'll show them, hey, here's what happens if you drop it. Here's what we're going to need, cash or loan or whatever they might need in order to make it through it. So we work with clients, like I said, daily. They change their mind all the time, and we're flexible with that.
Excellent. It's really great. Now, obviously, you've talked about flat pricing and rather than the old hourly billing model. In fact, I believe you bill in advance. Is that correct?
That is correct. We hit the client's bank account every Monday, and so we carry no receivables at all. So we do $3 million in revenue, and we truly have about maybe $18,000 receivables. So nothing to really talk about there. So we hit their account every Monday for that week, and with our agreements, we give the client. We want to be treated as a team member. So just like any team member, we can be fired tomorrow if we wanted to, and the agreement would stop tomorrow. So we want to be part of their team in all aspects. We don't want to be treated as a vendor at all.
That's excellent. I mean, $3 million of revenue, $18,000 of receivables. I can't imagine how many CPA firms would like to be in the same position as you. But how did you get to that position? How did you go from wherever you were to being in this position?
With the AR, it was pretty simple. We just one day decided we didn't want to be a bank anymore, and that's how we were going to bring on every brand new client was going to have be on our AR. And here's how we're going to do it. And if they want to do business with us, here's how we're going to charge. And we've had absolutely zero pushback from anybody that I can even think of since we actually implemented that, which has been great because obviously, cash in advance is better than, cash, 6 months down the road or 3 months down the road or not at all.
Yeah. And what about the older clients, the clients who weren't new clients? How did that conversion go and converting them to fixed price?
Yeah, it was kind of interesting because that's kind of our receivables. So with the old clients, we didn't convert them all at once. As they changed their thing, we talked about it and kind of implemented it. And if they resisted at all, we just kept them on as a receivable if they were truly a client that we wanted to deal with. And, eventually the new clients significantly overcame the old clients. So we didn't really push back a whole lot unless they wanted to change the level of service that they're getting. And then and at that point, we'd say, hey, here's how we do our new model, and here's how it works, here's how we do it. And really, again, very little resistance even from those clients because we're talking to them all the time. We're really good friends with them. We know them very well. We know their business very well. And they understand it, and we're teaching them the same models that we're doing ourselves. So we're showing them, hey, here's how you have to bill your clients, here's how you have to do it. I don't care what the industry normally does. Here's how you need to do it. And they actually implement it and are successful with it so that when we come back and say, here's how we need to do it, not a big deal.
Wow, really, really great. So there you were, humble accountant to superhero CFO, and I'm sure you did start the firm in a conventional way, preparing tax returns and financial statements, etc. That shift from that grinding work, which is kind of a reactive sort of job, to the more proactive work, such as the forecasting and all the back office and strategic work that you do now. How did you make that shift? Did you make it all in one? Did it come to you over time? How did you kind of work out that you wanted to get to a different place?
Again, kind of a selfish thing. I coach my kids in hockey, and hockey is obviously the wrong sport to coach if you're a CPA because you've got to work a ton of hours during busy season. I didn't want to work busy season. I didn't want to work a ton of hours. I wanted to work a regular hours, something I can control. And so what I tried to do is I tried to come up with a program that would spread out my time or my team's time so that we're not putting in a bunch of hours. And in doing so, my team doesn't work much hours at all. I mean, they work a 2,080-hour work year for the most part, with maybe 5 to 10 hours of that, extra hours during the tax season. Nothing significant, and that was all driven by, again, my selfishness because I didn't feel that it was fair for me to take time off and then have my team work a bunch of hours during that time. So the shift was on purpose. And in doing so, we really sacrificed a lot at the beginning because we couldn't figure out the flat fee model at first. It was really difficult to come up with the pricing. So, but once we did figure that out, then it became really, really nice. The way that we converted those clients is we did have the traditional tax clients that we meet once a year. We turned those clients into a monthly client and didn't charge them anything up front. We just said, hey, we're going to meet with you monthly. And we said meet with them monthly. And with that, they really liked the monthly touch. And so it was really easy to eventually increase their fee once they saw the value that we were giving to them. And then those clients asked, hey, we'd love for you to meet with us more often. And so that's where we went to the weekly fee. So we went with a weekly fee, weekly touch. And with that, they loved it because we were more of a strategic partner with them versus just a simple vendor at the end of the year that they talk about taxes and then they, of course, blame us for having a big tax amount due, or give us all the credit for the refund, which really we had no responsibility of that throughout the year if we were meet with them on a regular basis. So it was kind of by client demand that we actually shifted from the traditional model to the weekly model.
Right. No, that's great. Now, obviously, that vendor relationship, which most CPAs have. What you're describing for your firms is that with your clients you have the advisor-advocate relationship. How have you managed to cultivate those higher level relationships then? Well,
when people come to us, that's what we're advertising, that's what we're marketing to them. So that's what they truly expect. So when they come to us and we, don't technically sit down with them, because most of our clients, we've never even shaken their hands. We meet with them virtually through GoToMeetings and so forth. We'll meet with them and really talk, strategy. Because when it comes down to clients, whether you're a distributor, manufacturer, service company, whatever, they generally all have the same issues, same things that you can bring from one client to the other. And so we kind of take our broad knowledge of what we've learned in all these different industries and apply it to that client, and really kind of just sit down and work with them, asking tons and tons of questions. Questions are super, super important, because that will give you the idea where their pain points are and then what you have to focus on when you're giving them the strategic advice.
No, you're absolutely correct. I think most CPAs can't imagine sitting down across the desk from their clients, on such a regular basis. They'd always be concerned about the hours that they were actually incurring, and you're completely the opposite. You actually don't care about that. You are working solely for the client's benefit, and they know up front how much they're going to pay. Do you said you don't have much pushback on billing? Is there a special some sort of secret sauce as to how you got there, where they were all accepting of that?
The pushback now, because I think, and I can only guess on the client's the side, I think we give them such a high quality product or high quality level service that the money's really inconsequential. We charge an average of about $45,000 an engagement, and that'd be a yearly fee. And that ranges from $18,000 to $90,000, depending upon the types and levels of services that they're asking for. And you think about that, that's very, very minimal compared to what they would, that they would actually have to incur, especially if they're on the East or West Coast. Hiring a qualified accountant, somebody that really knows what she's doing. And with that, the fees I feel are very complementary to what we provide them. Because we're offering them a service that they can get, not just one person, but 5 people working behind the scenes on their account. One person that, many people that can give strategy and ideas. And if the CFO gets stumped, we'll huddle up. All the CFOs will huddle up and see if we can come up with a better answer and present that to the client. So again, I think the value is so great that the price is really, not even really thought of. Initially, yes. After we've been with them for a few weeks or a few months, no.
Yeah. Well, I mean, I see you guys as truly forward-looking, CPAs of the 21st century. And one of the advantages that I have is that I get the chance to speak with guys like you all the time. And I start to notice that there are similarities between all of you. And one of them actually is that for successful firms like yours, they tend to adopt the idea of being a specialist rather than a generalist and develop a niche instead of trying to be all things to all people. Now, if I understand correctly, your firm's carved out a niche in the digital media space. Can you tell me how that happened?
Yeah, that happened completely by accident, actually. We, in 2007, 8, 9, somewhere in that ballpark, when the internet was really coming around for us, where video conferencing was something that was pretty choppy, but still something that you could actually work with, we decided to venture outside of the Fort Wayne, Indiana market and provide the virtual service, nationwide. And so we did heavy SEO, and with that, we got an email from one of our clients, which was actually our very first client. It was kind of funny because it came into our junk mail, and with that, it was just kind of for the first. And I don't ever look at my junk mail. Now I look all the time, but with that, there's an email from this company out of Rhode Island that said, "Hey, we love your website." And it kind of went on and on and on. And I read through it like 3 times. I thought, are they trying to sell us on a website, or they want us to do their CFO stuff? I couldn't really tell. So I thought, well, I'll just give them a call. And with that, that company became our first digital client. And with that, it really kind of opened our eyes on how to actually, to the industry itself. And with that, we did really well with the client, and they're still a client today. And they've referred many of their customers, not customers, but of their actually competition to us, and which was pretty unique. And it just kind of went on and on and on. And they were really accepting of what we did, and we just continued to go. So specializing, I think, is hugely important. And it just kind of gives you a general idea how to handle clients from the very beginning, because you can talk the language the client has. So if it's construction that you're looking for, I'd focus on construction, because you're going to know how to talk to that client in their language a lot easier than if you're dealing with doctors and lawyers and construction and digital marketing and whatever that might be. So I really feel that the industry itself really isn't the key. It's just which industry you want to focus on is the real key.
And any other industries that you specialize in?
Well, when we initially started, we were that all, anything and everything. And we do have a small niche in construction, but nothing real significant. It just seems to, again, that worked with us really well at the beginning. But our main focus is digital marketing companies, and that's what we've been working on really ever since 2007. That's been pretty much our main concentration.
Right. Well, let's talk about your firm again for a moment. What proportion of your employees actually work virtually as opposed to driving into the office every day?
That's kind of a funny story too, because about 2 to 3 years ago, we had a brick and mortar office, and we still have one today. But at that point, we had roughly 20 people, and we could see really how things were growing, and we thought we have to do something to either buy another building, which of course I own the building, which made it kind of tough, or reconstruct the building so that we could put a bunch of people in it. How are we going to do it? And so we talked to the team, and a couple of our clients were actually distributed, where they worked all across the United States, didn't really have a home office. They worked from home. And I talked to them about, hey, this is the model that I really want to go to. And with that, I talked to them for about a year. And accountants hate change. And with that, I could just see the blood rising every time I talked about it. And so, and actually, it was my partner was the same way. And I thought, well, I give. We'll keep the brick and mortar. We'll figure it out. And so I kicked everybody out of the office for 6 weeks. We did a construction of the entire building, created really nice offices with TVs and all these cool stuff to make it really kind of nice to work in the office. And 6 weeks later, when I said, hey, come on back in, I had about 6 people come back in. Everybody else loved working from home. So that's kind of how it started, is that, I tried to, they kind of forced themselves to figure it all out. They love working from home. They're completely distributed. And with that, it works out really well. Out of the 30 people that we have, I have 4 people that work in the office right now. So the office is a very lonely place to go to. And fortunately, with us, we after we kicked everybody out, we said, hey, we're not going to hire anybody else in Fort Wayne. We're going to hire people throughout the United States. And so since then, we've made it really impossible for people to come in the office, because they don't even live near Indiana, let alone the office itself. So we're I'd say out of the 30 people, 26 are distributed.
It's incredibly unusual for a CPA firm. Let me ask you, though, do you have any issues with maintaining control, supervision, creating a team environment when people aren't necessarily physically together?
Oh, absolutely not. Actually, it's a lot easier for us. We use we really take advantage of technology. That's something that is ever changing, and we're really quick to make a change when it comes to technology. It's something that's going to make our team's life better and easier to work with. And so we've adopted many different platforms like Trello, Slack, Sococo, which is our virtual office. Definitely would highly recommend taking a look at that. And with that, because we've adapted all these different things, it's made it a lot easier for people to work together. With our main office platform is Sococo, and with that, not that I want to be an advocate for them or anything, but it really allows people to, it gave everybody the concept of being in an office without being in an office. They could video conference, they could share up to as many screens as they wanted to share. and they could have many people collaborating at one time. So not really too worried about being a hall monitor, because we don't really care. We just want to make sure that everybody gets their job done, gets the client their information timely, is available when asked, when the client calls, that sort of thing. So we've not had any really problems at all regarding that.
That's very interesting. That in actual fact, now everybody's embracing change by the sound of it. But I was told that unusually your accountants and staff generally don't work overtime. First of all, is that true? And if so, how do you actually make it through tax season? Or perhaps you could just share how big of a burden tax season is now.
Yeah, no, that's easy. With our team, they work 2,080 hours a year, so just basically a 40-hour work week. They're allowed to work a little bit more if they want to. They've got to get approval to do that, or they can work a little bit less, depending if they get their job done. We really don't care. So we don't really hold them to 2,080. They can work less as long as they're efficient. So when it comes to tax season, we try to balance everybody's workload, so they're doing about 30 to 35 hours of true work, client-related work throughout the year. And so when it comes to tax time, they're going to spend the extra 10 to 15 hours or whatever they're missing, during that time. And the nice thing about working with the client on a regular basis like that is that the tax return takes not very long at all, minutes to put the tax return together. It's pretty simple because the client already knows, we already know how much the client's going to pay in taxes before the end of the year, and it's just simply putting it together, which everybody knows that's not the hard part of a tax return. So it makes it really nice. I would say we probably had maybe 3 people work overtime during tax season, and they maybe worked 50 hours a week, maybe. Probably closer to 45 to 50, and the majority of the people didn't work overtime at all.
That's amazing. Well, I was also reading on your website that your firm takes a great pride in helping business owners strive in all sorts of economic conditions. So what do you do to help clients excel in both a bad and a good economy?
Well, I truly believe that the economy can have as much impact on a business's success or failure as what a lot of people have. So our CFOs look to remove as much risk as we can out of the customer, because that's really basically our job, is to remove risk. And one of the biggest things that we do is we really focus on a client having a 10 to 20% cash reserve at all times. That'd be 10 to 20% of their annualized revenue in the bank at all times. And what that allows us to do, and that's in addition to a tax reserve that we put together. So they have 10 to 20% of cash plus money set aside for the taxes throughout the year. So it really gives them the freedom to, if they needed to bid lower, to get the job if they needed to bid at their price and make a nice profit, because now they've got a ton of cash. It allows them to go through cycles that a lot of companies can't weather when they're tied on cash. It just allows them to really enjoy working with the company. They're not worried about the next payroll. They're not worried about how they're going to do this, or if a client fails on a invoice. It's a small blip versus when they don't have cash, it becomes a major blip, and a lot of times can really put a company out of business. So we really focus on cash, building cash, and in order to do that, we focus on clients generating a 10 to 15% net income at all times. And so our models are all based on how we're going to get them to that level. If we're having problems with that, what's the issues? Do we need to bring in someone else to help out? There's a lot of different things that we look at, but our main focus is removing risks. And if we can do that, then I think the economy is really the only last risk, and it's not as significant.
Okay. So what are the things maybe that you feel that your firm does especially well?
Oh, I think our firm listens. When we promote people within and they become a CFO from the accounting level to help clients out, we really listen to the issues that the client's having and really focus on resolving those issues. Empathy is huge, which is nice because we're not on their payroll, so we can tell an owner the real story. We can, without sugarcoating it all, we can let them know, hey, things aren't looking good. Whereas if you're on staff, you may not say that because you're their best friend, that type of thing. So we're a little distant in that area, so we can tell them straight up where things are at. We can really focus on forecasting with them so that they know where they're going to be at all times. And if things don't go well, we're the first person they call and say, hey, what do I need to do? I'm looking at this issue. What do you think? We become that sounding board for the client, and it really strengthens our relationship with the client and really helps. It's real fulfilling for our team. I mean, our team loves it. We don't get hardly any turnover at all, and it's just. I think it's the wave of the future. I think that's really what accounting firms need to go towards.
Yeah, I think one of the difficulties that accounting firms are facing is attracting young talent. I think it might be fair to say that your firm is set up to do that. How do you feel about that?
Oh yeah, our firm's definitely set up to do that. Young people like talent. We try to pay national averages, not just Fort Wayne market averages, but we're paying a national average. So if they live in a below, a market like Fort Wayne, which is 80% of the national average, they're really feeling positive because they're getting paid more than what they would anywhere else in the area. So we try to do that. We give them the benefits, the health insurance, all the benefits insured most people give. But again, the flexibility is one of the key things that people look at when they come to work with us. Flexibility on working from home. They don't have to commute. They don't have to buy all the work clothes. All that kind of stuff doesn't exist when they're distributed, which is really nice. And they just love it in all aspects. And the fact that we're not working a bazillion hours, which a lot of the millennials nowadays are really tough to get them to work a lot of hours. That's built into our model. So we kind of geared the model a lot towards really what we feel is important to the success or failure of our firm. So that's how we've done it. And then we market it through many different means, but we receive about 10 resumes a day from very qualified clients, or not clients, but prospective employees. And unfortunately, we can't even remotely look through as many as we have. So as we're looking for new people, we'll go through the last month's worth of resumes, which is quite a lot, to narrow it down to pick the people that we want to pick for our firm.
That's really fantastic. That's absolutely excellent. And then, whilst we've talked about a lot of positive things and a lot of aggressive things, is there an area that you wish you kind of did better at, Jody?
I would say better at. When people come to work for us, I would say the training is obviously something I would love to be better at. I think we probably do better than most, but it's something that I feel that's our biggest risk at this point, training our team, bringing them up to speed, because we do things so differently that when they come from a traditional firm, they really don't. It's a new culture shock for them. Working distributed, working through video conferencing, working with clients directly. A lot of our team members, they've been in public accounting for 3 to 5 years, and they've really never strategically sat down with an owner of a company to try to help them out. And now we're throwing them in that mix. They're like, I got to talk to the owner. It's like, oh, that's kind of cool. Whereas that's kind of the expectation when they come to work for us from day one. They're in those meetings with the owner, right out of college. And so it's a different atmosphere. And to train them, we've done a lot of redundancy where they're sitting and listening and watching and all that kind of good stuff. But as technology changes and everything, and we continue to add people, it's kind of hard to sometimes remember, hey, did we, this person never got this training because they started, 5 weeks ago or whatever. And so we've got to continue to focus on delivering the training of the basic stuff, on a regular basis, on a monthly basis, not just annually. It's just growth is just so fast that we've got to make sure that we're on top of it.
Yeah, I think it's interesting that you identify the training aspects. But I think that if we look at the accounting profession in general, I think it's facing some huge challenges. How do you see that?
Well, I think you're right. I think the accounting the future of the accounting firms is really it would be challenging, especially for millennials coming in and working for an accounting firm, and then at one day when becoming a partner of that accounting firm or buying it out is probably not going to happen. As a lot of people are finding out, it's just tough. The mindset of the new people coming in are a lot different than what they were 30, 40 years ago, or even 10 years ago for that fact. So the mindset's changing of the employees or the team members coming in, and really the owners of the firms really have to make some major sweeping changes in order to make it really attractive for those people to work in this environment on a long-term basis.
Yeah, and thinking about your actual business owner clients, what kind of help and advice are they looking for from CPAs today? And, how's that different from 10 years ago?
Well, 10 years ago, we never asked them, so it's hard to tell what they would have been looking for. With ours, now they're looking for, hey, we're looking to increase our prices. What do you think? Which ones can we actually increase? Which prices are we not, or which service levels or product levels are we not really making the profit margin that we need to make, and how can we improve that? They're looking for forecasting's huge. We get a lot of people coming in and say, hey, just because of the forecasting alone is why I want to be with your firm. On a regular basis, there's a lot of the strategic partners. Really, what they're looking for. Had several clients that we'd pick up from really qualified CPAs, and we would charge them 3 or 4 times more than what that CPA was charging them, and they were completely cool with it, saying, hey, our CPA is great. But they just don't get us. I only see them a few times a year, if at most. I need somebody that's going to be there and take ownership of my finances because I don't know anything about them. I can't even read a financial statement. And so, that's what they're looking for now. Somebody just to simply help them out. Let them be the best carpenter they can be or the best digital marketing company or whatever, and have somebody look over their finance because they don't want to screw up. I mean, when they've got 30 people or 10 people on the hook for team members, with their kids and families, they don't want to make mistakes. And that's where partnering up with someone like a virtual CFO really, really helps them out and gives them that sense where they can actually sleep at night.
Right. Well, with this ever-changing landscape for the future of the 21st century CPA, where do you see the biggest opportunities for your firm? Oh,
for our firm, we have, based on the recurring revenue model that we built, where 100% of what we have is recurring. Our biggest opportunities are just simply tapping into the market, being more of a leader in the market in our area to allow us to really build our firm. Right now, based on just if we continue on at the pace we're at, we'll add another $1 million to the top line and another $250,000 to $300,000 to the bottom line over the next 12 months, and the majority of that's already locked in because of the recurring revenue. Whereas somebody starts in November, we don't really see 12 months worth until next November type of a thing. And so I think our biggest opportunities would just simply be bringing in more and more clients and just continue adding to the machine.
And what about the breadth of expertise that you offer? Is that something where even from the existing client base, you could generate extra revenue if you had additional experts in your stable?
It's hard to tell. We've kind of done that a little bit this year by bringing in an individual that will eventually become our tax partner, somebody that can really focus on that industry. We do 401k audits is our kind of like a other little area, and we brought in an expert there that can actually manage that area. So, as we get bigger and bigger, then we probably would bring in more experts to do it. Now, the only weird thing about that is we don't charge hourly, so we've got to be able to build it into our model so that we can bring that person in and still be profitable. And so that's kind of the trick. And we don't want to bill hourly, so we don't want to have the one-offs. We want everything to be all-encompassing all the time. So that's kind of the give and take that we've got to have. Do we want to get into valuations? We'd love to, but I don't think we want to build in the profit for that or the revenue for that to get the gross profit we need in order to do the tasks that we do. So
Yeah, I guess I was thinking along the lines that because you offer virtual CFO, you offer virtual services that individual clients can't afford to have somebody full time. That you might want to look at the same kind of model and bring in experts who you can't afford to have full time, but you would like to have that extra suite of services to offer, knowing that you can get them without paying somebody, for a full time.
I see what you're saying. Yeah, like our vendors basically. Yeah, we've done that already, where we've instead of hiring a marketing person, we've looked for a freelance marketing person that's out there that doesn't want to work a bazillion hours or be an employee and do their own thing, and we've hired that person to help us manage our website. That'd be a perfect example. And as we get bigger and bigger in that regard, we definitely look for things that we don't want to do or hire somebody to do full time, but can kind of leverage their expertise for. That's right now our biggest area, and I could see that probably widening up as the bigger we get. Yeah, absolutely.
Well, Jody, it's been great speaking to you. Unfortunately, our time's just about up. I'd like to thank Jody Grunden, Managing Partner of Summit CPA Group, for being so generous with his time today. Thank you, Jody.
Thank you very much. Thanks for having me on.
Jody, if people want to learn a little more about your firm, what's the best way to reach you?
Best way to reach me would just simply be drop me an email at jody@summitcpa.net or pop on our website at www.summitcpa.net. We got a ton of things on there. We try to be as transparent as we can with everything, so everything's on there for people to look at.
Could you just repeat those for the listeners, please?
Sure. Jody, Jody, at Summit, SUMMIT, CPA.net, or our website at www.summit.cpa.net.
Okay, there you have it. This is Ian Wellham saying goodbye for now. Thanks for listening. We'll see you next time on the Accounting Success Podcast.